Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for May 2nd, 2018. Well, folks, I need to make a little bit of an apology. I feel the need to make an apology. One of the things that I talked about, I kind of got caught up, I guess, in the Apple earnings, and looking at Apple, there was so much attention focused on Apple. I actually made this statement that depending on how Apple performs, that I would expect a gap up if they report well, and I would expect a gap down if they report poorly. Well, we certainly got the gap up in the stock because Apple reported tremendous earnings, but I was suggesting that the overall market could potentially gap up sharply or gap lower. Now, although we are looking at a positive open this morning on the market, it was wrong of me to try and predict the future price action of the overall market. It's actually wrong to try and predict the future of any stock. One of the things we need to do, and it's a lesson that I continually learn, the market is very humbling on this fact. When you try to predict the market, when you try to predict a stock move, the market often humbles you. It lets you know very, very quickly that, hey, you can't predict the future. What we need to do as traders is work really, really hard in our price action work, our technical skills, reading our price chart, and learn more to just follow the price action once it starts to move in a direction rather than predict it. You know, it's the big institutions, it's the trillions of dollars that they bring to the market that sets a direction for a stock. Our job as technical retail traders is to identify those clues left behind when they start moving a stock in a direction or moving a market in a direction, and it's our job to follow along. And for me to have said, we're going to gap up or gap down, hopefully you've noticed I try to avoid any of those kind of biases in what I do in these videos. And I slipped up. I got into the whole hype around that earnings, and I actually said, hey, I think we're either going to gap up or gap down. That was wrong of me to do. Now, clearly the market is humbling me this morning with a small move up in the futures and really not producing all that much in a gap. So just another reminder that our job is to read price action and take a look at price action very closely and decide whether or not we have an edge in this market or not. So looking at that and kind of going with that theme, I want everyone to notice here in the Dow this big wedge pattern that's being built, and here we are hanging out as we move toward this point in this wedge pattern. There really is no indication here if we're going to go up or go down. We could continue to just go sideways. And that's what we really have to recognize when we're looking at markets, that there's nothing going on here that gives us a great direction. Now, if you're a candlestick person, you know, clearly we have a hammer pattern. It was nice to see that relief rally yesterday afternoon as we bounced up off of that low. But remember, any kind of a hammer pattern requires a follow through. We need to see price follow through, or that hammer really meant nothing. So keep that in mind as you look forward for today. We're facing a big day on the economic calendar. Not so many as far as a number of things. We have the Adp report here this morning, and Adp, you know, has really slipped in my opinion. Sometimes they're close, sometimes they're way off on their estimates, and so that one has really kind of dropped in importance to me. But we do have the EIA petroleum status report today, and of course that will be important for those oil stocks. Oil has enjoyed a really nice rally on declining supplies and the potential of a Syrian conflict that could restrict oil supplies out of the Middle East. It's going to be extremely important. If this were to come in with another decline, obviously that would boost or help sustain those oil prices. However, if we see a surprise increase in supplies, that might affect those prices. So watch that closely. And then the big Mac Daddy report of the day is the FOMC. The FOMC is going to report on interest rate rises. Now, Fed funds futures are suggesting about a 95% chance that the FOMC is going to raise the interest rate this meeting. So that's not a big surprise. What would be a big surprise is if they change something in the statement today that would suggest more hawkishness. Now that they've kind of reached their goals that they have set, economic goals for the FOMC in employment and in inflation and those kind of things, the question is whether they're going to become a little bit more aggressive or a little bit more hawkish. And so we'll need to watch that. And the market could definitely react to that if they say something in the statement about becoming a little bit more aggressive in their stance. So watch that closely. Let's take a quick look at the SPY. SPY is really in, I'm going to remove all of these lines just down to this. And notice here again, we're in that wedge pattern. That wedge pattern where we've got higher lows but lower highs, and we're defining this out toward this point. And there really is no specific clue here as to which way we're going to go. We could easily slip higher and slip lower, or we could just tread water and go sideways. So be real careful here. The clues that we're going to be looking for really good signals is we need a break of those of that downtrend, break of that downtrend, a positive hold of that trend as support, and then buyer stepping in. That's where we're going to get those real clues that we have some upside potential here in the market. The downside potential would be if we fell through this, rallied back to test it as resistance, and then had follow through selling to the downside. That's where trouble would really come in here. So watch for those price action clues and just realize that in this zone right here, we're kind of two-sided. Anything is possible. Let's take a quick look at the Qs. The Qs also in that same pattern. Here we have that downtrend, here we have that uptrend, and we're just stuck in this range. It was really, really nice to see that bullish engulfing candle yesterday on those results, and as you can see, the Qs are indicating just slightly higher this morning, and not the big gap that we would expect after such a relief came in Apple. And so we could easily see this continue to slip toward that point of that wedge, and we don't necessarily have to move one direction or another. Let's take a quick look at the VIX. The VIX has been really interesting lately in that it really hasn't responded much to all the emotion in the market. And we're just kind of going sideways here in the VIX. We did get a little bit of a pullback yesterday on that rally, and that's nice. What we'd like to see is this support of this little price area right here be broken. Let me draw a line there, quick arrow. Right across there, we want to see that break and this move on lower to really kind of ease some of that tension in the market. But I don't suspect that will happen today just because of the FOMC, the anticipation around the FOMC, and really the violent price actions that can be created after an FOMC announcement. So, you know, I think today expect the market to do a lot of chopping around after the morning rush, just a lot of chopping around as we wait for the FOMC. After the FOMC, expect really fast intraday whipsaws for a little while as the market reacts, and then it'll finally pick up hopefully pick up a direction and kind of clear up whether we're going to move higher or lower in the market. Let's take a quick look at T21. 22, because T21.22 is also helping us out here a little bit. and setting us right here in the middle. At one point in the day yesterday, T2122 was clear down here, and that intraday rally brought us all the way back up. So looking at it as we stand right here, we're back up toward this middle, and giving us room to move up, giving us room to move down. So we kind of continue to be stuck in this little range bound area, in this consolidation area, and we're going to have to watch closely for those clues, that direction, when the market provides it, as to which way we're going to go. Now, having said that, doesn't mean that there aren't good stocks out there, because there are very good stocks out there to be looking at, and a consolidating market can be a very productive market when it comes to trading. We just have to look for those good stocks that are moving in a nice trending methodical pattern, because a trending a market that's stuck in a consolidation can still produce nice trending stocks, both up and down, and we just have to work hard to identify them. So spend your time looking at those charts, not trying to predict, following along as they begin to move, and things will get easier. It's less stressful, and it'll produce better results consistently by just learning to follow a good trending chart rather than trying to predict future market direction. Everyone, I want to wish you a fantastic day. And if this is the first time you've seen these videos, please do me a favor and click on that subscribe button on YouTube, the follow me button on Facebook. Click those thumbs up buttons and drop a comment. I really do appreciate that. And also feel free to share this video with any friends and family. Hey, by the way, if you'd like to learn more, I write a morning blog as well. You'll find the link to the blog just below in the description. Feel free to click on that and take a short read of that morning blog. Everyone, take care. Have an awesome day. I wish you great profits, and we'll talk to you all very, very soon, bright and early Thursday morning. Have a great day.